James, welcome, buddy. Where are you today?
I'm at the Noosa Mining Conference in sunny Queensland. So we are here for 3 days. So started yesterday and we'll be continuing through to tomorrow. So really good to see a lot of people from the industry and small junior mining companies is the main focus here. Unlike IMARC,
Yep.
which was sort of more your bigger companies, bigger events. So really good, really sort of personal, good chatting to people one-on-one. It's a good event.
That's good. It looks like you're in a greenhouse. Is that like a glass ceiling there, or are
Uh,
you out in the open?
it's just a little extension from the conference. So the conference is behind me. You can probably hear it. This is just just a little cafe extending up. Just trying to find a little quiet spot to
Fair
get the
enough.
chat across.
Great. Well, look, in today's Factel Daily, you're talking, you discussed technology and how that's increasingly intersecting with mining operations. And obviously, based on the visit that you're in now in Noosa and your more recent one that you just mentioned, IMARC, um, which technological innovations do you think you're hearing is going to have the most impact on the sector's profitability in the coming years and months?
Yeah, so there's tech is really making its headway into mining. It's all across from processing to exploration. So just I guess what I saw at IMARC, which had a really heavy tech focus, was the processing side. So just trying to put it in simple terms. So if you've got if you're putting through your ore through the you're trying to get the maximum metal from each ton of rock that you mine. So the recovery rate. So you want to sort of maximize that, and there's some AI, sort of integrated AI technology, which is trying to improve the recovery rate. So that's just sort of helping address some of the output issues at some existing established mines. So it's just one of the examples where AI is helping some of the challenges with mining. There's also exploration. So on the exploration side, there's certain sort of AI. One thing I saw in Sydney was a core scanning machine. So it actually logs the
Oh,
core.
yeah.
So I don't know if readers are sort of familiar with what a geologist actually does. A big part of their job is to be out in the field and actually logging the drill core that comes through. But these machines can actually scan the core and then just essentially log it with this AI sort of integrated machinery. So it's really changing the landscape, but I don't think it will change or replace geologists' role yet. But it is really interesting seeing how this technology has really started to make some changes in mining, and it's
Yeah, because
mining. Yeah, mining is it's traditionally been a bit of a slow adopter to technology, and it's not really really been that open to innovation. I think just with the challenges we're seeing with lack of new discoveries, greenfield discoveries, and declining output at certain established mines like Codelco and Chile, I think this is where technology will start to really kind of make its mark in mining. So I think we could probably see that over the next couple of years.
so the AI traditionally is not something that the mining sector or tech they haven't really embraced new technology traditionally, but they're starting to, and that could have a big impact. One of the things that you compare in today's piece is the current opportunities in critical minerals to historic counter-cyclical investments like BHP's acquisition of WMC and Northern Stars Rise. What is there any parallels that you see between those situations and today's market?
So the connection between, I guess, what we looked at with the last mining cycle, and really that was all about the infrastructure boom in China. So it was really led by iron ore. Um, there were some really strategic plays at the beginning of that cycle. So BHP bought WMC sort of really as a precursor to the big China boom. So that was really a company maker. So that established BHP as the world's largest mining company. And I guess what I drew on in this piece with Factel Daily was that the big miners are what establishes them for several years ahead is by buying assets, cheap assets. So we saw that recently with Rio Tinto and its bid on Arcadium. So it openly said that this was a counter-cyclical acquisition for lithium.
Yeah.
So that's, I guess, what the opportunity is for investors. They can kind of think like these big miners. Northern Star was another example. So in this case, it was gold back in 2013. So Bill Bowman and his other executives, just as a penny stock, bought Barrick Gold's assets in Australia at a very cheap price, right at the major downturn in gold. So this happened at a really opportune time and really accelerated Northern Star as Australia's largest gold producer. So these counter-cyclical moves can really set up companies, and I think investors can kind of learn from that experience and sort of repeat that with their own sort of portfolios by looking at cheap assets. And I think if you're going to look at any space right now, that would have to be critical minerals, which have really been in a bear market for about 18 months. So it's just one of the examples of where you can see some opportunities in the market.
Yeah. So, final question then, James. Like, where now from here? Are these moves in these sort of takeover moves, these partnerships? Is this a sign that we're in for a pretty exciting 2025, or where do you see it playing from here?
I think we are. I mean, there's concerns. There's always concerns. I think we're still going through this sort of stop start part in the mining cycle, and that's going to happen while we wait for sort of clear demand drivers. So we had the China stimulus pop up as a major bullish sort of tailwind for commodities a few months ago, and that's tapered out. China hasn't really followed up with more stimulus announcements. So it's where does the next major demand driver come from? So I think when we think about all the liquidity, so the US and Europe are both undertaking sort of rate cut cycles. They've already begun, or America's already begun that. China, so from east to west, there's going to be more liquidity hitting markets. So that's going to be good for mining stocks and junior mining stocks. But we're still waiting on more stimulus from China. So that's also going to be a key factor. So I think there's definitely some good signs for 2025 as investors wait for the next sort of stimulus. I think there's good opportunities as the market kind of goes through this stop-start momentum, buying the dip, I suppose, and watching those higher lows, if you look at the charts, is also a key indicator of strength and heading towards a more bullish center. So I'm positive for 2025, even though the market has sold off in recent weeks. I think there's still some really good signs.
Cool. Do you know what? I'm going to give you one more question because that was sort of a more of a bigger picture question. What's the mood at that place like? Speaking to people and people on the ground, is it?
Yeah, no,
What are
that's
you
a good
sensing?
that's a good question, and that's always important at these conferences, just to get the general vibe of what's happening. And I think it's not super bullish, like it's not what you'd expect in a sort of top of the cycle kind of feeling, but it's certainly not the bottom of the cycle, say back in 2016. It goes with this. We're sort of on this slow upward trajectory in the cycle, and I think that's kind of reflected in the mood today. So there's certain stocks like gold is doing really well. So I think you talk to management of some of the gold companies, and I think they're quite bullish, even though the gold juniors haven't done very well over the last few years. I think there's some clear signs that major companies are going to have to invest in exploration and resupply their existing deposits. So I think there's good signs there for gold. Other base metals, energy, the feeling's probably a little bit more muted. So I think this time next year, I think things will be a lot more positive.
Cool. All right, James, we'll leave it there. Thanks for jumping on. I know the connection's been pretty bad and it's quite a lot of background noise going on. For those watching, check out James's piece today. It's a really interesting piece and it's free with Fat Tail Daily. Check it out. Thanks, James.
Thanks, Woody. Cheers.
Thanks for tuning in to Fat Tail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.